Welcome to lecture number 28. So, how do you evaluate the performance of a manager of, let's say, a plant, a manager of any department, or a manager of the whole company? So, one way is using budgets, which we discussed in lecture 26 and 27. The another concept which is used to evaluate the performance of any manager is called responsibility accounting. Like budgeting, responsibility accounting is an important part of management accounting. Responsibility accounting involves accumulating and reporting cost and revenues where relevant. So reporting cost and revenues where relevant means cannot all managers are responsible for the revenues. Some managers are only responsible with departments which incur cost but do not generate any revenue. That is why whenever we are dealing with the concept of responsibility accounting, we have to make sure that we should clearly figure out which responsibilities does a manager really have. Under responsibility accounting, a manager's performance is evaluated on metrics directly under that manager's control. Responsibility accounting can be used at every level of management in which the following conditions exist. Costs and revenues can be directly associated with the specific level of management responsibility. For example, when we're talking about a production department, so we know a production department is responsible for production within any company. So we can say with full confidence that a specific level of management is responsible for the cost incurred through the production department. The costs and revenues can be controlled by employees at the level of responsibility with which they are associated. Whenever you are trying to, do responsibility accounting with respect to with respect to any department or any employee, you have to make sure that those employees are uh, directly responsible for controlling those costs and revenues. Budget data can be developed for evaluating the manager's effectiveness in controlling the cost and revenues. So illustration 20 to 17 depicts levels of responsibility for controlling cost. When we talk about a department manager, so he's responsible for controlling cost in his department. For a division member is responsible for the costs associated with that whole division, and the company president is overall responsible for controlling the costs associated with the company. Under responsibility accounting, any individual who controls a specified set of activities can be a responsibility center. Thus, responsibility accounting may extend from the lowest level of control to the top strata of management. Once responsibility is established, the company first measures and reports the effectiveness of the individual's performance for the specified activity. It then reports that measure upward throughout the organization. Now, responsibility accounting is especially valuable in a decentralized company. What is a decentralized company? Decentralization means that the control of operations is delegated to many managers throughout the organization. For example, we can say that we have a big organization in which we have many departments. Now, each department is responsible for its own costs and its own revenues related to its activities. For example, sales department is directly responsible for the revenues generated because of the sales. Then you have the marketing department, which incurs cost in form of marketing expenses. Then you have production department. Then you can have the maybe operations and maintenance department. So that is called the decentralization concept. The term segment is sometimes used to identify an area of responsibility in decentralized operations. Under responsibility accounting, companies prepare segment reports periodically, such as monthly, quarterly, or annually, to evaluate managers' performance. Responsibility accounting is an essential part of any effective system of budgetary control. Now, what is the difference between Responsibility accounting and budgeting. There are two main differences which distinguish responsibility accounting from budgetary control. One is the distinction is made between controllable and non-controllable items. When we talk about budget, so we do not, differentiate between controllable and non-controllable items. For example, when we talk about the production department, now production department is not directly responsible for the property tax that is paid by the company, because that is not under the control of the production manager, but still it becomes a part of the budget. In responsibility accounting, we only talk about those expenses which can be directly controlled by that person. Second is a performance reports either emphasize or include only items controllable by the individual manager. Responsibility accounting applies to both profit and not for profit entities. We know जो profit entities होती हैं, their aim is to maximize net profit or net income or profit. The not for profit होती हैं, their aim is to give services as efficiently as possible. Now, what is the difference between controllable versus non-controllable revenues and costs? All costs and revenues are controllable at some level of responsibility within the company. This truth underscores the attach by the CEO of any organization that the buck stops here. Now, it means that for the CEO of any organization, that CEO is ultimately responsible for all the expenses that are incurred and all the revenue that is generated by the company. So the CEO can be held responsible for that. Under responsibility accounting, the critical issue is whether the cost of revenue is controllable at that level of responsibility with which it is associated. A cost which a manager has control is called a controllable cost. From this distinction, uh, from this definition, it follows that all costs are controllable by top management because of the broad range of authority. Fewer costs are controllable as one moves down to each lower level of managerial responsibility because of the manager's decreasing authority. So we can say that control is directly linked to the authority that one has. The more authority that you have, the more control you will have over any cost or any revenue that is incurred or generated. And the lesser the authority you have, the the lesser you will have control over costs and revenues. In general, costs incurred directly by a level of responsibility are controllable at that level. In contrast, costs incurred indirectly and allocated to a responsibility level are non-controllable costs at that level. Principles of performance evaluation. Performance evaluation is at the center of responsibility accounting. It is a management function that compares actual results with budget goals. It involves both behavioral and reporting principles. What is management by exception? Management by exception simply means that you try to focus on those items which deviate from your stated goals. For example, when you make a budget और आप देखते हैं कि आपके बजट में कोई एक आपका ऐसा फॉर एग्जांपल आपके ऐसे एक्सपेंसेस का आपका जो बजट था और जो एक्सपेंसेस आपके इनकर हुए हैं वो अनफेवरेबल है. Let's say your budgeted was $40,000 and if you have incurred $60,000, so when you will focus on extra $20,000 of expenses that you ended up incurring, that is called management by exception. Management by exception means that top management's review of a budget report is focused either entirely or primarily on differences between actual result and planned objectives. This approach enables top management to focus on problem areas. For example, many companies now use online reporting system for employees to file their travel and entertainment expense report. So when you have the online reporting system for travel and entertainment expenses, so it becomes very easy. As the employees put in their data, you can immediately see कि किसके कितने document रेलेवेंट हैं, किसके जो expense reimbursement claim है, how high it is, why it is so high. So that is called management by exception. Management by exception does not mean that top management will investigate every difference. For this approach to be effective, there must be guidelines for identifying an exception. The usual criteria are materiality and controllability. Now, what is materiality? Materiality आपने पढ़ा होगा with respect to auditing में concept आता है. Materiality means the significance and the quantity of that item. For example, बहुत से items होते हैं, maybe we try to ignore them because they are not significant in nature. They are immaterial. Without quantitative guidelines, management would have to investigate every budget difference regardless of the amount. Materiality is usually expressed as a percentage difference from the budget. For example, management may set the percentage difference at 5% for important items and 10% for other items. Managers will investigate all differences either over or under budget by the specific percentage. For example, if maintenance costs are budgeted at 80,000 but only 40,000 is spent, major unexpected breakdowns in productive facilities may occur in the future. Why? क्योंकि जो आपकी budgeted maintenance थी that was 80,000 and if you ended up spending only 40,000, इसका एक तो मतलब ये हो सकता है कि मे बी आपने मेंटेनेंस करेक्ट मेंटेनेंस नहीं की या फिर you did not do maintenance of all the items that you were supposed to do. So आपकी budgeting बेशक it is under या over हो, you have to make sure that if it is material, you should always investigate it. Alternatively, a company may specify a single percentage difference from the budget for all items and supplement this guideline with a minimum dollar limit. For example, the exception criteria may be stated at 5% of budget or more than $10,000. Controllability of the item. Exception guidelines are more restrictive for controllable items than for items the managers cannot control. In fact, there may be no guidelines for non-controllable items. For example, a large unfavorable difference between actual and budgeted property tax expense may not be flagged for investigation. Why? Because simply it cannot be controlled by the manager. It cannot be controlled by the company. उसके different reasons हो सकते हैं. इसके reasons हो सकते हैं कि maybe आपका there was an increase in the tax rate or in the assessed value of the property. So this activity, since it is uncontrollable, so there is no point in putting resources into investigating it. Behavioral principles. The human factor is critical in evaluating performance. Behavioral principles include the following. Managers of responsibility centers should have direct input into the process of establishing budget goals of their area of responsibility. हमने already पढ़ा है कि if managers are not taken into confidence while making the budget, so they do not take it fairly and they think कि वो शायद उनके ऊपर प्रेशराइज किया जा रहा है. Second, the evaluation of performance should be based entirely on matters that are controllable by the manager being evaluated. When you try to evaluate the performance of any manager, so you have to make sure that the factors that you're considering should be under the control of that manager. Otherwise, that evaluation will be uh, impractical and inaccurate. Top management should support the evaluation process. As explained earlier, the evaluation process begins at the lowest level of responsibility and extends upward to the highest level of management. Managers quickly lose faith in process when top management ignores, overrules, or bypasses established procedures for evaluating a manager's performance. The evaluation process must allow managers to respond to their evaluation. Evaluation is not a one-way street. Managers should have the opportunity to defend their performance. अगर आप किसी मैनेजर की evaluation negative करते हैं, so the manager should be given ample opportunity to justify the reasons for that adverse performance. The evaluation should identify both good and poor performance. Praise for good performance is a powerful motivating factor for a manager. This is especially true when a manager's compensation includes rewards for meeting budget goals. Responsibility reporting system. A responsibility reporting system involves the preparation of a report for each level of responsibility in the company's organization chart. To illustrate such a system, we use the practical organization chart and production department of Francis Chair Company in illustration 2280. अब आप देख रहे हैं ये this is your individual departments. आपका जो fabricating department है, it will create its own report. Department manager sees controllable cost of his her department. Assembly department will have its own cost incurred by it, or obviously उनकी जो those costs we have to make sure that are controllable by the assembly department. Then we have the enabling department. It will have its own controllable cost. होता क्या है कि जो आपका each department है, it will send its report to the respective plant manager. For example, आपका जो assembly department है, we say it reports to the Chicago plant. आपका जो enabling department है, it also reports to the Chicago plant. तो होगा क्या? तो जो आपका plant manager होगा Chicago plant का, it sees summary of controllable cost for each department in the plant, and then it sends its report, the report of that specific plant, to the vice president it answers to. Vice president sees summary of controllable cost in his her functional area, and all the summary of all these reports are then sent to the president of the company, who is directly responsible for the uh, expenses, cost, and revenue generated by that company. The responsibility reporting system begins with the lowest level of responsibility for controlling cost and moves upwards to each higher level. This is the lowest level है. Then आपकी जो individual departments हैं, they report to the plants. आपके जो individual plants हैं, they report to the vice presidents, and all the vice presidents report to the president. Report D is typical of reports that go to department managers. Similar reports are prepared for the managers of the fabricating, assembly, and enabling department. So each department is making its own report and sending it upward to their respective reporting lines. Report C is an example of reports that are sent to plant managers. It shows the costs of the Chicago plant that are controllable at the second level of responsibility. This is the second level of responsibility. Chicago plant की जो report में cost आएंगी, those costs are directly controllable by the Chicago plant. Reports, in addition, report C shows summary data for each department that is controlled by the plant manager. Similar reports are prepared for the Detroit and St. Louis plant managers. Report B illustrates the reports at the third level of responsibility. It shows the controllable costs of the vice president of production and summary data on the 3 assembly plants for which this officer is responsible. Similar reports are prepared for the vice presidents of sales and finance. So each uh, department will have its own report, and those reports then will be sent to the president. Report A is a typical report that goes to the top level of responsibility, the president. It shows the controllable costs and expenses of this office and summary data on the vice president that are accountable to the president. If we look at these reports in Excel sheet, so we'll see अब जैसे आपका this is your report D, the lowest report. इसमें आप देखेंगे this is to the fabricating department manager. It shows the expenses that are occurred by the uh, report D. ठीक है? So this is the fabricating department जो आपका आ गया जिस department. उस डिपार्टमेंट की अपनी रिपोर्ट है. It has controllable cost जिसमें direct material, direct labor and MOH आ गया. So you have the budgeted and actual, and then you have the outcome, उसका रिजल्ट क्या होता है. Now ये जो आपका fabricating department का था budgeted, इसका जो रिजल्ट है it goes to the प्लांट मैनेजर शिकागो में, which is one step higher than it. जब वो शिकागो में गया, नाउ यू विल सी कि उसने हर एक का, जैसे उसने शिकागो का अलग है, डेट्रॉइट का अलग है, सेंट लुइस का अलग है, हर एक का वो कंपाइल होके देन इट गोज टू द रिपोर्ट बी विच गोज टू द वाइस प्रेसिडेंट्स, और जो आपके वाइस प्रेसिडेंट्स की इंडिविजुअल उनकी अपनी रिपोर्ट्स हैं एरिया वाइज, दोज रिपोर्ट्स गो टू द president. Types of responsibility centers. There are three basic types of responsibility centers: cost centers, profit centers, and investment centers. What is a cost center? A cost center incurs costs and expenses but does not directly generate revenue. Managers of cost centers have the authority to incur costs. They are evaluated on their ability to control costs. Cost centers are usually either production department or service department. Then you have the profit center. A profit center incurs cost and also generates revenue. Revenues. Managers of profit centers are judged on the profitability of their centers. Examples of profit centers include the individual departments of a retail store, such as clothing, furniture, automotive products, and branch offices of banks. Like a profit center, an investment center incurs costs and expenses, and additionally it does investment as well. It has control over decisions regarding the assets available for use. Investment center managers are evaluated on both the profitability of the center and the rate of return earned on the funds invested. Investment centers are often associated with subsidiary companies. So these are the types of responsibility centers. आपके expenses centers हैं in which you only incur expenses. How? By burning dollars. So when you are incurring expenses, so you become a cost center. How do you become a profit center? Not only are you incurring expenses, but at the same time there is inflow of cash as well in form of revenue. Then third one is the investment center. You have the expenses and revenue, and additionally you have the return on investment as well, which comes as an inflow to that center. So this is the end of lecture number